My name is Hugh Agro. I'm the president and CEO of Revival Gold, and with me is John Meyer, our VP Engineering and Development. We're advancing one of the largest portfolios of gold development projects in the Western United States and marching towards production.
Hugh, good to see you, sir. John, lovely to see you again. And we need new answers, that's for sure. Too much of this mergers of equals rubbish. We need new answers, don't we? Right, so, well, it is a good time to be talking about gold, and I guess you're getting a little bit of feedback here at Beaver Creek. How are the meetings going?
I think excellent. I mean, everybody's in a very good mood. The gold price helps, but I think there's something else going on here, which is a recognition that, as was the case when we started this company, people are starting to recognize that there is just a dearth of good gold projects in good geographies. So the equities are getting valuation today.
And are you finding, we've talked about in the past, the type of money that's coming into the space, not just people re-entering who used to be here and gone away, but new money. What are you seeing out there?
We are seeing new money, and we're seeing money not just looking for the quick flip, but the long-term build and deliver. And that's really important to us because that's our mantra at Revival Gold.
Okay. We're not going to talk too much about macro today and your thoughts on gold price, etc., because I think that could lead for a long, long conversation and debate. Maybe let's remind people what you've got, because what I want out of today's conversation, I think what the viewers at home would want to also understand is the kind of how you set things up for success. Because timing is one thing, but you've also got to be able to execute. So can you kind of go through some of that setup component for me initially, and we'll pick it up from there.
Well, listen, I would love to tell you that I've got a crystal ball and I saw how all this would develop, but I didn't. What we did know as mining engineers and developers and operators of gold projects is that there's really a scarcity of these good projects in good locations. So when we set about with the foundation of Revival Gold some 7-8 years ago, first of all, we started in a good geographic location, Western United States. Secondly, we went for brownfield assets where we have existing technical knowledge about the site and proven past production, supportive communities, and data with which we could get started on a plan towards possible future engineering and production.
A little bit of infrastructure doesn't help.
So, and a little bit of infrastructure, yeah, it doesn't help. It goes a long way, especially when the cost of that infrastructure is just going up and up and up. And so, that was the foundational idea around Revival Gold. We're now 2 gold projects. We would not be able to assemble these projects in today's market. We'd have too much competition. The gold price has more than tripled since when we put these assets together, and more recently with the addition of our Mercur project, I think we can take credit for a 12-year assembly of property position that you just could not do today. So these are rare special assets, and that's the foundation upon which we launch into this next phase of growth.
Okay, so let's be clear. So you picked the right thematic. So give yourself a bit of credit. You've jumped into the right thematic. You've had the foresight to actually maybe look at the type of portfolio that you wanted to build out, because I think for long periods in what was a quite depressed market for juniors, not a lot of credit, not a lot of value being attributed to those things, right? Tough going, right? Yeah. So I think one of the other things I'm interested in before we kind of leap into the kind of economics and the commerciality of this was, obviously you've been able to raise capital in a space like this. You brought in some quite interesting partners.
Well, we have, and validation, not just partners, but validation. Smart investors, Dundee Corporation came in earlier this year, and then just recently EMR Capital, really smart set of folks out of the Rio Tinto group, and then a success with Oxiana. So these are mine finders and builders before they became financiers, which means we went through a lot of due diligence as part of that process, which the retail audience, the high net worth audience can take advantage of today in our market because we do trade on the open market, but these guys put a lot of work in before they put their money into Revival Gold. So yeah, we're cashed up, 30 million of cash, great portfolio of assets, and we've gone through the heavy lifting of putting together the resource that underpins economic plans, right? So 6 million ounces in our portfolio of resource in total. And of that, 2.5 million ounces is now in engineered plans underpinning that $500 million NAV in our company.
Right, and I think the other thing that that type of money brings in is a entirely different, well, not entirely, eventually entirely different kind of share register, which bring in turn affects the kind of liquidity going on, and that's something that you've not had the benefit of up until this gold run, right?
It's true.
Different world?
It's true, yes.
Different problems, different challenges?
Different challenges, different problems. I'm sure you're going to get to that.
Yeah.
But look, we're starting with a foundation of institutional and high net worth owners that are long-term investors who understand the space, and they've been through the tough times. I think they're going to stick with us for the good times here and then some. So that gives us confidence that we can continue to fund the business on an efficient, a shareholder efficient and shareholder friendly basis, and that's reassuring for everybody.
Okay, well, let's get to the heart of this conversation. Well, certainly the bit I want out of it, which is this is about delivery, execution, to a certain plan, and therefore sequencing of events. So it might be worth actually just a quick run through on Mercur and Beartrack-Arnett as well, just for people new to this story, and then let's get into that sequencing.
Yeah, so Mercur's first. It's on private land in the state of Utah, about a half hour from a town of 30,000 people, which is a huge advantage to us. The other big advantage, it's on private ground, which allows to permit more quickly, and there's existing infrastructure which we can take advantage of. So those are advantages for this and make it a first in the pipeline project for us towards free cash flow. Broadly speaking, we're looking at 2.5 plus or minus years to get to a construction start, and that's really the focus of the business. We have Beartrack-Arnett as a large 4.6 million ounce blue sky opportunity for our owners. Another phase of heap leach gold production in that project, which we're marching along, and the underground potential to continue to pursue there, which Matt, we're going to be drilling there this year. Rigs arriving end of September, and so we're going to continue on with the exploration. But let's go back to Mercur.
Right.
And I really think this is the time to turn things over to John. John's been with us for 4 years. John, give a bit of your background for the audience.
Sure. Before joining Revival, I was with Perpetua for 10 years. So I saw that project from PEA, PFS, FS. So I think we're kind of in the heart of that now with our projects and trying to move that design forward. I'm a mine designer. Before that project, I was the project manager of Fruta del Norte with Kinross and Aurelian, again, focused on mine design and development. So.
Okay, and obviously, a lot of things are the same. Nothing's really changed. I guess the cost environment's maybe changed a little bit. But what are the things when you're sort of looking to build out a mine? What are the first things you look to address in terms of risk assessment and economics moving forward?
Well, sure. Well, obviously you have to be integrally involved in the resource, understanding the resource, the behavior of the resource, metallurgical behavior, geotechnical behavior, all those kinds of things. Flow sheet development, key, understanding how best to process that, finding the right recipe. So it's that's early stage. That's a stage obviously we've focused on at Beartrack-Arnett.
Right.
It's a phase that we're very much working on right now at Mercur.
Fantastic. And tell me the difference between, obviously, like build teams and operating teams entirely, well, there's a little bit of overlap, but entirely sort of different sort of functions. Can you explain, how you look at the Mercur project today? Because you got at the end of the day, you're working out the economics of this thing, and you're under maybe a bit of pressure from the market to deliver on time, all of that good stuff. But for you, what are you saying to the team in terms of the order of play, the imperatives, in terms of executing well?
You do need a team that evolves throughout this process. Right. Explorers are not necessarily developers, are not necessarily builders and operators. The team evolves through that process. You got to understand that. Obviously, what I didn't mention is my history with Barrick before the Fruta del Norte days. I was involved in all aspects. I had a corporate position with Barrick, from project side of things to operational side of things to closure. So I think I'm I'm familiar and I understand how the team has to continue to evolve and to continue to get the best people you can at the stage you're at, because the team does have to evolve. And I think, we're in that process. We're doing that. We're constantly building our team.
So what are we counting down to? What's the time frame we're looking forward to as, hungry investors looking for catalyst moments?
Yeah. So I think stepping back from things, the main, the big objective I think for us will be to, turn a shovel on construction. So sort of backing up from that, next year will be about completing a PFS. We'll have more to say about the timing of that when we get into the new year.
Yep.
And backing up from that, of course, we want to start the permitting process and setting ourselves up to be able to meet that timeline of plus or minus 2.5 years to start a construction. Backing up from that still, we're into this year, which is all about drilling. And we've got 2 rigs working away on our Mercur project. A third one will join us here shortly. And the objective there, infill drilling, looking at some expansion opportunities to the resource. A lot of news flow will come out of that from drill results. And then, of course, metallurgical test work, de-risking the metallurgy, preparing for that PFS. And something that John didn't mention in his introduction really is the key part that the team plays, and that John's been a part of forming these kind of teams that can deliver, right? So having a good hand, having the network of people, understanding the pieces that are required, not just in terms of engineering the design, but engineering the design that's optimal. That's an iterative process, and it's like a puzzle, very much like a puzzle. And then also understanding the permitting steps and how the design can influence the permitting timeline and optimizing on that. So I cannot emphasize enough how fortunate we are to have somebody like John leading that team of people, putting that team of people together, and creating the thinking and the space to be able to optimize on what we have. We have a lot of opportunity, not just in terms of exploration with these assets, but in terms of delivering a better project, lower capital, lower operating costs, better efficiency of operation, timeline from completion of construction to delivery of first gold, and making sure that that's a de-risked process along the way. You can invest in a development project over here and another one over there, and they may have the same financial returns, but can you optimize on risk with that? Minimize risk for optimal return, and that's what somebody like John brings to the table.
It's an interesting time at the moment. Obviously, the permitting I'd love to talk about in a second, because is there much permitting for building going on in Idaho?
Well, we're talking about Utah.
Oh, you're back in Utah, so Idaho.
But there's
I look at you go.
There's
Idaho.
a lot going on in both states. John could
so the
speak to
answer to
both.
that is yes, there is. Okay, I know the answer to that. Okay, so that's fine. With regards to in terms of the optimization component, because at times like these, I think there's a lot of people waving pom-poms and going, it's going to be like this forever, folks. And if anything, it's going much, much, much higher for all the reasons that they will give. But if I talk to old hands, there are cycles and things do come up for whatever reason. I think I was speaking to Jeff Quartermain.
Prepare for the unprepared.
Prepare for the unprepared. So there's a point at which optimization is, diminishing the law of returns, right? So again, how do you kind of come up that versus, taking advantage of the market? Right.
I mean, I think that in many respects, what we're trying to do here is get to a place where the project is somewhat is optimized with the permitting so that we can get going.
Yeah.
That kind of bootstrap approach. Because, historically we might have drilled and drilled and drilled, continue to grow the resource as junior.
To what end?
I don't, we're not in that world. That's not a world that I think people want, and we acknowledge that. We think we've got 2 projects that we can do exactly that. And so that's our focus, certainly. With Mercur first, it is important to optimize, but the optimization has got to have an end, and because we got to move on. And I think that it's the nice thing about a simpler project, and I would argue, both of those initial projects are simpler. They're crush heap leach operations. They're not mills. They're not refractory processing and the complication that goes along with it.
Yeah.
So the optimization is an easier process, and so we can get on with the permitting, and that's what we're doing.
Okay, so and I do know a bit about permitting in Utah, but it's mainly from uranium. So what is the timeline that you'd be aiming for?
You've asked me that 3 times now.
And I said, what is the, no, I don't mean, what, like, no, but how long does it take? There's a kind of sort of a period by which they got to get back to you, and you've got to...
So I'll break it down just a little bit. I mean, we've got a lot more work to do before we fine-tune all this, but broadly speaking, we're looking at about 2.5 years to start a construction.
Definitely not said that in this conversation.
Sorry?
You've not said that in this conversation.
So within that, about 2 years related to permitting. So collection of baseline data that we'll need to supplement what we already have and what we've been developing, and then all the steps with the regulatory authority, which in Utah, happily for us, is the Department of Oil, Gas, and Mining, state authority. A lot of benefits around that. Not that we're going to skip any steps, of course, but I think they just work more efficiently than the federal government.
Right, and given the nature of what you picked up with Mercur, I'm not saying that are there any shortcuts, but how do you expedite matters again to take advantage of a positive market like this?
Yeah, John, maybe that's something you could speak to.
Well, I think that in the case of Mercur, because we have existing baseline from the previous operation, and because that footprint is largely similar, that's really helps us. And of course, some of the work we're doing in terms of our drill permitting overlaps with the baseline collection associated with permitting the project. And so that really helps us because there's overlap there on the data and the work we're doing to support drill permitting with the work that we need to support the project. So to the maximum possible extent, we're trying to integrate those two so that if there's something a little bit more we can do in the exploration phase of baseline, we'll take that advantage so that that incremental work then serves a need for the permitting of the larger project.
And that's, you talk about what will we do in a better market. I think the fact that we've got a fully funded business and the backing of some institutions, corporate ownership that is very, very supportive of the team that John's putting together, that we've got working away here, that means we have the greater confidence to make longer term decisions for the business. That means ability to hire people. That means ability to accelerate the pace of drilling. For example, when we started the program this year, it was with 2 rigs. We were able to find a 3rd rig, and we had the money to bring that rig on and accelerate the pace of work. So the faster we get that drill data in, the faster we can move to the steps to refine our programs and plans for next year. And so that's synergistic for us. And it comes from having solid financial backing and a solid balance sheet.
Right, and obviously as you move into that phase, we'll go to Lassonde curve problems and challenges where people perceive this, it's the boring phase, it's the valley of death, or however you want to frame that thing. How do you kind of keep that excitement up? You mentioned exploration a little bit at the beginning, and obviously Beartrack-Arnett advancing and using new technologies to improve recoveries and so forth. So how are you addressing that problem?
Well, I think we addressed it in the strategy behind setting up the company in the first place, right? Because we have multiple places where we can deliver value, we're not caught in a Lassonde valley of death with just one project, one path of activity, one path of value creation. So let me talk about some of the value creation. Beyond marching Mercur to production, there's the opportunity to expand the resource. You will recall that land position is an anticline. We're working away on the east side of that anticline, but there's a whole other west side of that anticline. Only about 0.5% of the drill holes have gone below 400 meters. We've got the same lithological units on the east side as on the west side. The west side is unexplored by us, and it's an area where we've done a big gravity survey, and we're looking for targets to bring future value to that project. Remember, it's a Carlin-type system. It's one that's delivered a lot of high grades in the past, and this is the kind of place that 4 Mile emerged from. It's the kind of place that Cortez Deeps emerged from, and so it's very prospective ground. So exploration potential around Mercur, optimization of what we have there, I think those are catalysts for us. And then you look at Beartrack. Beartrack is a open pit heap leach. It's on its own path of permitting. It'll take a longer timeline than does the Mercur project, but it gets us to a critical mass of gold production from open pit heap leach, and then we've got the underground potential behind it. So as we continue to explore that and develop up economics there, I go back to my earlier comment, 2.5 million of our 6 million ounces of resource are engineered. That leaves us 3.5 million ounces to bring into NAV. And we can take that $500 million of NAV and increase that through engineering studies on the existing resource. And that's value add for our investors. And all of these things are sitting in this existing portfolio. We don't have to spend a lot more money to bring this together. It's done.
Yeah, well, I wanted to go there because a lot of people are trying to do this. It's a very competitive environment, perhaps a futile environment for many. Okay, so you've got this layering of activity and valuable activity. You would argue, you just have argued as well. Just that, do you think that kind of allows you to kind of compete? Because there's a lot of gold stories out there at the moment.
There are a lot of gold stories. There aren't a lot of gold stories that are in the domestic United States that have a short timeline to production, that are backed by the likes of EMR Capital and Dundee Resources, that offer a 0.2 times NAV valuation, that have the kind of exploration potential from large-scale, big geological systems. And I'd say we're a rare find in the space.
Good to see you, Hugh.
Thanks, man.
I'd love to meet you again.